Welcome to the Trading Lounge and the Indices Report. And we're going to start with the European markets and the American markets and the Australian markets. And with the European markets here, the stock 50 here, representing the sort of top 50 stocks in Europe. But I think this is a bit of a bias to the UK side. However, it does give us a bit of a blueprint. First of all, the move down through here, all of this here is a corrective pattern in one way or the other, and what we're assuming is that wave C or 4 is in place here, and wave 1 up here, wave 2 pulling back to the 50-60% retracement level. Wave 2 is normally sharp and simple, so it's doing its job, and then wave 3, 4 and 5 and so on. Now, the trouble with wave 4s is that they can get rather complicated. Wave 2s are normally sharp and simple. Wave 4s are normally sideways and complicated. If there is another count, if this market moves straight through here, if we get a very clean, clear 5 waves all the way down here, breaching the 61.8 retracement level, then we would need to look at a scenario where we have this as the B wave here, and the C wave would be over here, and the wave 4 would be over here as well, and then we'd be looking for sort of a larger 5 waves to come into play, so to speak, like this, before we see a move up. Okay, so that's what we're up against, and as I've mentioned last week and this week, we were looking for the turn. We've got the turn. We're in the move. And we're getting in close to this junction here now, where we want to see wave 3 move to the upside. So look, it's just something that we have to work through, and we're net short in most of our trades. So we'll start if we see support come in, we'll start to tighten them up and start to remove the strongest looking sort of the more bullish ones we'll remove and add new long trades and those sorts of things, you know. So that's that really, and let's move on and start having a look at some of the markets. So first up is the DAX, and what we're looking for here, the market's moved through the 50 and the 60% retracement level and is heading into the 11,000. So we're looking for an A wave here, which had 5 waves in it. So pretty easy to read in terms of a nice strong third wave. The B wave, and then the C wave here is 1, 2, 3, basically 4, and down for 5 here, and there'll be 5 waves in this sequence. So we're very close to the end here. I must point out that the move down through here is quite humongous. And it normally, you know, wave C and wave A would have some sort of correlation here. So it's sort of typically looks like a third wave. That's why it's all a little bit sort of scary. But we still need to allow this to play out here, and that's what we've been doing. So, you know, over the last few sessions, whatnot, we've been counting 1, 2, and looking for the third wave. I mean, it's probably typical to go here, but it just counts better being here, but not that it's a big deal. The fourth wave and the fifth wave. So we're actually looking for a low to be in place here within the next session. Okay, and this is the same for the AEX as well, even a nicer wave count, and it hasn't moved through the 50-60% retracement level, so really it's all pretty tickety-boo, I guess. You know, we've got nice little 5 waves here or whatnot, and then B, and then 1, 2, 3, 4 and 5 here. You could count the last 5 in here if you wish, but it's very neat and tidy, and this also goes for other European markets as well. Let's just have a look at the CAC 40 for a second. So the French market, we've got the same scenario, wave 4 here, up for 1, back for 2. And, you know, if we're wrong, then we need to look at wave C of 4 down here. And this could play out in a couple of ways in terms of the wave count, if it's that interesting. It's down here for wave A, and then an A wave, a B wave, and a C wave here for wave B here. That would probably be the best sort of fit for all of these sort of patterns if you're wondering, well, it's one fit. But the main point is that we would need to look for 5 waves down here. But the point is that we have to stay with all of this being corrective here, because there's overlapping wave structures here, so it's definitely a corrective market. Okay, so it's just, all markets are just working across their numbers. Okay, what else was I going to look at here? The FTSE, we'll have a look at the FTSE now. The FTSE's moved through at 61.8 retracement level, which is at 6.6. But at the same time, we've been tracking the move down in line with the other markets. We just know that it's, one of the weaker markets as such. So we'll also be looking for this to end here in the next session as well, okay? So let's see how that pans out. So if we get a move down below here, and then we find support on the 6.5, then you can use the 6.5 support as a setup to go long. Okay. Now, the US markets, and obviously they're being through their sort of earnings at the moment. I'm going to start with the NASDAQ because it's nice and simple and clean and tidy, a little bit like the European markets. And in that case, we've been looking for wave 1 to the upside. And then we noted we had we were looking for a top anyway, so I think we pretty well nailed that one. And we've got 5 waves down here, so we knew that we'd get a counter trend, and then another 5 waves here. And we would expect that to come in on, find a low on this number here. So that's what we're looking for. So once again, it's just about splitting hairs, and we're very close. Even if we were wrong, for instance, then we need to bring this down to here, and we would expect if this was wave, let's just say that we end up getting a bigger picture down here, then it would unfold in terms of wave 1, wave 2, wave 3 here, wave 4 back to the wave 4 of 1 lesser degree, and then wave 5 here. So if we get 5 waves here, then you know what happens, don't you? You get an A and a B and a C correction back up anywhere between 40 and 60%, depending on the sentiment at the time and what's happening, and then we'll get a 3rd wave down here. Okay, so this is what we need to work through. So I expect to bounce off the 45 here, and this is the same with all the markets. So we really need to find this. We need to find that previous wave 4 here. It needs to develop as support, right? That would be the catalyst, or part of the catalyst. The wave structure's the other one too, because if we see the move up here being, some sort of corrective pattern, then we know that it's the wave 4, and we'll know where we are at that point. Do you know what I mean? But even then, we would have to wait for this move here before we start to look to short this move down through here. So we're either going to go long here, or we're going to be going short here. That's it. So you don't have to worry too much about it. You just need to do nothing until those 2 events unfold and say, well, this is it. Let's go. The S&P 500. Now, like the FTSE, it's moved through at 61.8%, the bottom of this box here. But at the same time, markets can move down past that. That's okay. We just need to track the wave structure. And if you've got a keen eye, we've got 5 waves for wave A, B, and then we've got in wave C here, we'd be looking for 5 waves. And you can see those 1, 2, 3, 4, 5. So it's possible that we have the low in place here already. Let's just check on things. 2-hour chart, 15-minute chart. So I think that we could actually have the low in place here already, but I need to just double check that on the cash market. Just let's just do a bit of homework, shall we, while we're here on the hop. So wave 3's here. So we've got A, B, and C wave in 5. So 1, 2, 3, 4, 5 for the C wave. So that's an A, B, C for wave 4 here. We've got 1, 2, 3, 4, 5. So that's wave 1 here. Wave 2 here. And 1, 2, 3, 4, 5. So that's all of the third wave. The fourth wave's in here, and this has got to be the fifth wave. So in a nutshell, we do have 1, 2, 3, 4, and 5 here. So it's got 1, 2, 3, 4, 5. It's sort of, I don't know, a bit iffy. Anyway, all we need to do is we just need to spend some time on this. So we can expect a bounce to come in from here, at minimum back to the wave 4 of 1 lesser degree here. This is where it could fail. This is where we want support. Okay, this will tell us that we're going up here. Okay, the Dow Jones, the same as well. You know that we've been an A wave, a B wave. We've been counting our 5 waves down here for wave C. So this could also come back. Well, you know, we need it above this number. We need support on 17,600. Well, 17,650 is a number that I'll be sort of looking at with a bit of interest. But yeah, look, it can be a wave 4 and move to here and go down. If it is a wave 4, it's going to be complicated. You know what I mean? It's going to show sort of overlapping wave structures like that, okay? If it's going to be moving up here, then we want to see it climb straight up. Do you know what I mean? We want to see a clean structure here. If we see a messy structure, then we know exactly where we are and we know exactly what to do at that point. Because I'll just go over that. If that's a wave 4, if all of this is wave 3 here, then wave 4 will pull back to the wave 4 of 1 lesser degree. Wave 5 will come down somewhere down here somewhere, and that's fine. You can, you know, scalp that, whatever. But then we'll look for the A, the B, and the C wave coming back up, and then this is the one to short at this stage here, because if we've got 5 waves here, then we're going to get another 5 over here. Okay, the Australian Asian sector. So now this is my original count for this is basically an A wave in here, a B wave here, C wave here, and B wave here, and we'll be looking for 5 waves down here, right? That's sort of, well, back down to this point here. That's our original thing, because we were looking for we're tracking this down, looking for an A and a B and a C back up to here, 61.8%, and then down from that way. If the European markets are going to move up, then we need to be, we kind of got to be mindful of that. And I'm thinking that the next step would be this 5,500 needs to stay in play, and we'd look at it like this here. So we'd look at it as another 5 wave structure to the upside. 1, 2, 3, 4, and 5 here. Didn't work out very well, but anyway, you got the gist. So basically a move to here. So that's what would be sort of considering. It would only be bullish in this market if this 5.8 became the support, because it's above the 61.8 retracement level. But more important, this was the support, and then it became the resistance here. So it would have to knock out that supply, those sellers, and find support here. So we've been tracking this down here. Now, you know, if we turn into a bear market here, just for instance, let's just go to the 4-hour chart here. this is what it would look like. This is the original count, okay? So the original count is wave A, B, and C for wave B, and then down here in 5 waves. On the cash market, I can count 5. So we'd be looking for an A wave, a B wave, and a C wave back up here, A, B, and C, and then down for 3, 4, and 5 here. And this would make a larger wave 4 down here, okay? So that's this is sort of in line with the banks, this particular move. But at the same token, as I pointed out, if the European markets and the American markets recover from their current situations, which is possible, we need to see it out, then this market can have another 5 waves up here, and we would need to look at this as the A wave to here, the B wave to here, and the C wave up to here, and take it from that point. That's just the 4-hour chart. So the let me have a look here. So we've been tracking things on the 2-hour chart, I think. Okay, well, this is the same scenario here. This is the primary count that we've got, and it's 5 waves down here for wave 1, an A wave, a B wave here, and then a C wave over here. That's the 50-60% retracement level, but the 56 area, 56 to the 5650 area. So it's possible that we could be looking at wave A, wave B, wave C as wave 2 here, and then wave 3 here. So we need to be very careful that this, if this is going to play out, we need to be fully aware of what's what and when is what, and so on. So on the 15-minute chart here, now in this particular case here, this is lined up with the European markets, but it's actually ahead of the European markets, okay? Because we were looking for, I was actually looking for, as you know, and I've led you astray, is down for 1, back for 2, down for 3, back for 4, and then down for 5, finishing at this number here roughly. But it wasn't the case, so I've had to relabel it like this, which is a better fit really, but an A wave, a B wave, and a C wave. It wasn't a really good looking situation, but we have 5 waves from here down to here, so that's okay. Now we've got 5 waves here as well, okay? So I'm just going to go into the 5-minute chart here. So on the 5-minute chart, we could look at this as being wave 1 or wave A. It doesn't really matter. But what we need to understand is that if the European markets are going to turn to the upside, okay, then we need to be sort of working with that. That's kind of the main point, okay? Now, we've got 1, 2, 3, 4, 5 here. The 50-60% retracement levels back here. But I've pulled this apart here, and we've got 5 waves here for wave A and wave B here, and I've pulled this apart here. I can still see that we've got further to go down here. But I must point out that if on the cash market we get a breach of this 510 here, for whatever reason, if this is breached here, then we've got a bearish picture in play, okay? So that makes things a little bit different as such. And as I've said before, in a bit of a nutshell, if the 5-5 becomes the retested resistance, then we've got a bear market. But in this particular case here, this is the next critical step here, this 5-5-10. Okay, so yeah, we'll see the cash open, lower and all the rest of it. Will we just have a look where the S&P cash is for 1 second? So it's down over 0.5%. So it's likely that we're going to open lower and test lower in here. So yeah, let's just see how we go. Now, if it tests here lower and then starts to find support on you know, if you see strength in the market, then go for it. Do you know what I mean? Like, yeah. So 5.5 would be a place to start with. Okay. So that's the ASX. Now, just want to have a look at, just bear with me here. It's this market here. This is the China H shares. Not much difference from the A shares and the rest of it, you know. So this is a daily chart here, but it's going back to 209 here. So this is the same, basically the same pattern as the Australian market. Okay, there's not really much difference. So it's an Asian thing. Now, the move down through here, from this low here, for instance, we can count 5 waves up through to here. So it's okay. We could probably call this wave 1 here and back for wave 2 here. It's possible, okay, but it just counts better with 5 waves down here. So in this particular case, we're basically looking for a large A wave here, then an A and a B and a C wave over here. I haven't really labeled that properly, but I'll get around to that. An A and a B. Triangles occur in wave B or wave 4, so that's fine as a wave B there. And then wave C here in 5 waves. So that being the case, we should see 5 waves over here, okay, which presents a pretty bearish picture for Australia as well, okay. Now, in Australia, I've looked at this situation here in terms of our banks, and we're looking at, well, I won't go there just yet. I need to bring up the long-term chart for that. But anyway, this is the Asian situation, and on the on the A50, which it's moved down here from the high. Is we've got 5 waves coming down from the high here in terms of 1 and 2 and 3, an A and a B and a C for 4, and down for 5. So that's where I'll get that wave 1 from, okay? I could lift that up here. It's probably slipped a bit. Now, then I was looking for an A wave here, an A and a B and a C wave, which is unfolded quite sharply and can move lower here because that's like the 3rd wave in the middle here. And then I was looking for a B wave back up here and then down here. So basically wave 1, an A and a B and a C, and then down again from that point there. So this has got different pricing than oh no, same. Okay, yeah, it's on the right track. Okay, so anyway, that's the Chinese market looking quite bearish as well, which kind of fits the Australian situation as well. All right, that's that. I'll probably do an update on the banks. I'll do a separate video for that and post that over the next 24 hours, and we'll cover the major banks within that sector. Alrighty, cheers.